Welcome, fellow business brokers. Today we've got Steve Mariani with us. How you doing, Steve?
I'm doing well. How are you, Jim?
Doing fantastic.
Nice
Steve's
to
from
have you.
Diamond Financial, and we also got Tammy Teece. How you doing, Tammy?
Good afternoon, Jim. I'm doing well. Thank you.
Excellent. Tammy's from Live Oak Bank, and today we are going to be talking about SBA loans and how they're going to be impacted on a very positive situation with the CARES Act 2, and that's what I'm calling it. A lot of people are calling it CARES Act, and it's actually called the Consolidated Appropriations Act. Did I pronounce that correctly?
Consolidated.
Consolidated. That makes more sense, Steve. Consolidated Appropriations Act. That's why I call it the CARES Act 2. So we're going to be talking about SBA loans. We're going to be talking about the 7A loans. We're going to be talking about SBA Express loans and 504. We're going to be spending most of our time with 7A because as business brokers, that's what we're dealing with. So Tammy, do you just want to give us a quick rundown of what the new CARES Act 2 addendum says about the 7A program?
Yeah, thanks. Love to. Some really, really great benefits, and it's going to be a very short window of time, as you all know, through the end of September, the end of the fiscal year. A couple of things that are extended into April, but there's been some really great incentives that have come about. So effective immediately after signing was that the guarantee fee is going to be waived for borrowers on 7A loans and 504. 504, obviously, only the 40%. But that is a huge benefit to borrowers and incentive to really kind of go for, looking at businesses and applying for financing.
Real quick, I'm sorry to interrupt, but that waiver of the guarantee that's like 2.5–3% of the loan, right?
Well, it is. So just as an example, on a $2.6 million deal, that's $66,000.
And that's
So,
on $1 million, it's 27,000, just short of 27,000.
Yeah. So that's
huge,
money
right?
that you.
Right there, that's huge.
It is. It's
Okay.
huge. The other benefit there is that they're offering a 90% guarantee to the banks. So you'll see maybe potentially a little bit more flexibility, and so a little bit more risk, but it's two great things that went into effect immediately after he signed. So that's benefits that can be taken advantage of right away. The other great benefit that is coming into play will start and transactions closed after February 1st of this year up until the end of September. Those loans will be eligible for payments for 6 months made by the SBA up to $9,000 a month. So those two benefits right there, if you're talking about a $2.6 million deal, that's $66,000 in guarantee fee, $54,000 in payments. So that's a huge benefit.
That's like, oh my gosh, that's fantastic. That's
like
it
really is
some $1,000 just the government's paying or waiving. That's fantastic.
Yeah. So just for clarity's sake, if your monthly payment is $9,500 for 6 months, the government will make $9,000 of that payment. So you'll be responsible for that $500. If your monthly payment is $8,900, then you're in the clear for 6 months. So they're capping that payment.
They're capping up the $9,000.
On that $9,500 payment, my understanding is that other $500 can be deferred if the lender chooses. Is that correct?
That is correct, but I think that might be on a lender basis, but kind of unclear right now. Yeah.
Just for clarity, what I'm talking about is that if your payment is $11,000 and they only allocate $9,000, you can ask your lender to defer the other $2,000 on those 6 payments. If your payment is over $9,000, you do have that option. Whether the lender will do it or not, I don't know. But the SBA is putting pressure on the lenders to try and help the borrower. So if that other $2,000 out of that payment is a struggle, you can ask for a deferment there too.
Just out of curiosity, that $9,000 cap that the government's willing to pay on a monthly basis for the 6 months, approximately how much of a loan is that? Do either one of you guys know?
Yeah, so if it's on a 10-year term, that's about an $800,000 loan. If it's on a 25-year term, so a purchase of real estate, that's about 1.5 million.
So an $800,000 purchase.
Mhm.
Okay. All right. Good. That's fantastic. That's a lot.
That's at prime plus 275.
Right?
Okay.
There is one other thing that I want to bring out in this deferment conversation. Typically, on an SBA 7A loan, the lender had the ability to defer up to 6 months worth of payments. Included in this bill, they allow up to a full year's worth of payment. That was always the SBA rule. A lender had 6 months worth of window. If you were in trouble, you could ask for a 6-month deferment. They couldn't go past that without SBA's authorization. In this bill, they allow the lenders to go up to a year. And actually, it says the following paragraph after that says, but you can go past that if you really need to. So I don't know why they put the 1 year in there, but the following statement says, if you need to provide additional deferment payment period, you can justify it and do it. So, anybody who is in trouble that has an SBA loan, there are a lot of avenues to get some help now, but that's one of them. If you've heard from your lender that said, you're out of deferment period, it just got extended.
So
and I
is
know
that
that
just
helps our clients.
Steve, that's on existing loans though, right? Not new loans
Correct.
made after February
Right,
1st.
right. Existing loans
Yeah.
that have either already got that 6-month deferment or out of deferment,
Mhm.
or could use a year. I don't know if it's a restaurant or some of the other industries.
I had an interesting situation today. I have a deal that was supposed to close January 15th, and my seller was gracious enough to allow the closing to be moved to February 1st so that the buyer could take advantage of this situation. So, I I just thought that was really nice of him. Now, hopefully nothing happens in the next 2 weeks, but I thought that was super nice of him. And, if you're looking to close January 25th, holding it out another week can make a big advantage to the buyer. So,
Yep, absolutely.
And I wasn't sure. Is that the actual? It must close after February 1st. I thought even if it closed before that. And I
No,
was reading a lot of that this morning.
it's driven by your SBA authorization number, and it's anything after that, February 1st.
So
Okay.
when's the end date? When do you have to buy a business by?
It has to close and fund by the end of September. Mhm.
September 30th.
Does it close in fund or just PLP? Because I heard issuance of PLP this
Well-
round as opposed to any previous.
Well, that may be something new.
But I don't know.
But last round it was closed and funded. So
The last round it was.
yeah.
So we are not going to see you guys the last 2 weeks of September like we did last year, right?
Well, here's the caveat to that. It's all premise on when we run out of funds.
Mhm.
Will we get to the end of September? Who knows? We could be running out of funds. I mean, some of the lenders we're talking to, July, August, June, who knows? All of this stops when the end of the appropriation ends. So that is something we're all going to have to keep on top of. Now, there again, with inventory levels down, we don't know. Nobody knows what or anybody's volume is going to be this year. But let's make sure we all understand. As soon as that money runs out, this all goes away.
All right, so I want to. So you get the waiver of the guarantee fee, which is 2.5% to 3%, and they're getting 6 months of principal and interest paid as long. And this takes place as long as you're closing after February 1st and before September 30th, you're closing and funding it. And the banks are 90% covered, guaranteed. Steve, because a lot of people listening may not understand why that's so important to a bank. Can you say from a bank's perspective? Because this is my feeling. If we climb the head of a bank, it gives us a better idea of why the banks are going to be more motivated. So go ahead, Steve.
I'm happy to expand on that. And Tammy, jump in. But out of all the advantages that we just discussed, that's the single biggest one to me. And I'm going to tell you exactly why. And believe it or not, that 90% guarantee means nothing to the borrowers. It doesn't save them any money. But what it does do is it drives our lender underwriting criteria a lot. And here's really the difference. And I know Live Oak does some and doesn't do some as far as selling them. But on the secondary market, the bottom line here is if it's $1 million loan under the old program where we have a 75% guarantee, those lenders will sell $750,000 of that $1 million loan to replenish their funds to lend out more money on the selling lenders. At a 90%, now they're selling 90% of their loans. So their exposure on $1 million loan is only $100,000 instead of $250,000. And the way most of the selling lenders regulate their volume is their amount of exposure. So if we're looking at the amount of exposure, if they're saying, hey, we won't do more than $100,000 worth of goodwill exposure on our side, well, that means a maximum loan amount is $400,000. You know, that same 100,000 exposure with a 90% guarantee can get them up to $1 million loan with the same amount of exposure. So that's where the underwriting criteria is going to greatly change. And we've been down this road before in the 2009 crash and some of the other ones. A 90% guarantee reduces that lender's exposure down to 10%. And not only that, allows them to sell an additional 15% of that loan, which makes them more money. So the incentive is off the charts as far as that goes. There can't be a better scenario on the lender side if they sell their loans. So that's really the motivation.
That's huge. That's going to let the banks really want to lend a lot of money. And you know, I respect the fact that you're saying that's probably the number one thing out of all this, because I think as brokers and working with buyers and sellers, we're so focused on the benefits to the buyer, but at the end of the day, it's the banks that are lending money. If the banks are willing to do it, you know, lend more money, that's huge for us. One thing I haven't heard anything about, and there was rumors about this, did I miss this, or moving the $5 million cap on how much a borrower can borrow from the SBA? Did they ever move that up, or is it staying at $5 million for an SBA 7A loan?
They did not increase it during this round.
Darn.
They did, however, and keep the increase to the express line up to $1 million through October 21st or October 1st of 2021. And then it will revert back to permanently being 500,000. So that did get increased from 350 permanency to 500, but up until the 1st of October, they're going up to $1 million on the express lines.
And SBA express lines, that's for you know, buying new equipment and things like that, right?
Yeah, it can be used for working capital, revolving lines of credit. You know, a lot of times we'll pair that with an acquisition so that they have access to capital if they need it.
Yes,
but not acquisition.
Acquisition of a business, right? That's
right.
Just for
right.
Yeah. Okay. I wanted to make that clear.
Yeah. Current clientele.
This, I think, is a very important thing that we need to discuss. I think this is extremely important, and Steve kind of alluded to this, but we didn't really talk about it too much. In the new addendum to the CARES Act, the loans are more, there's more beneficial parts to the loan for businesses that have been hit hard by the pandemic. So how does that work? You know, let's take a restaurant, for instance, that's been really hit hard. How does that work? Do we know yet? Do you guys know what I'm talking about, or no?
No, what? No.
I'm sorry, but there's they're saying in this new act that certain industries that have been hit hard by the pandemic, they're going to be treated differently. And
so you're looking at the details on the difference?
Yeah.
Okay. Well, from my understanding, and this again is more talk than anything else, but as Tammy and I discussed before, they're looking at and drilling down on NIASIC codes to determine industries. But what our understanding.
Steve. Can't hear you, Steve. Tammy, can you hear me?
Yep, I'm here.
We lost.
I can't hear Steve though.
We lost Steve. We'll give him a second. Tammy, unless you want to pick up.
Yeah, no, I can certainly do that for you. So what I think you're asking is, there was something built into this CARES Act for additional assistance around monthly payments of SBA loans that they currently have in place for certain industries will get a more advantage. So what the wording is that if you had an SBA loan that you had already in place as of March 27th in beforehand, that you will get an additional 3 months of monthly payments made for you by SBA. Now they got that 6 months when it happened originally. So now they're going to get another 3 months. But they've also made a determination that some industries were hit harder, and they're calling it, they have yet to determine which industry codes those are, but they will get an additional 5 payments. So, that could be maybe, and I'm just speculating, family and entertainment. You couldn't go to the trampoline park or something, one of those types of things. Some of those harder hit industries, it may or may not be restaurants. I always wonder how they make the determination. But once we get those codes, those businesses will get an additional 5 payments. But if you had a loan in place prior to March 27th, you'll get an additional 3 payments.
Wow. Okay. Do you think?
Hi, back? Can
Yeah,
you hear
you
me?
are.
Hi.
Hi.
Welcome back, Steve. So do you think that the banks will actually be willing to lend to the businesses that these kind of business been hit really hard?
I can tell you how we're kind of evaluating them and looking at them. A lot of people are trying to look in the future to see what industries are going to be affected, like we discussed before. Gyms could be years before they come back. But we're actually even drilling down to a week-by-week basis. Where it really becomes a struggle is where the governors and the states are still closed. That's the unknown. Operating at 25 or 30% or whatever else is hard to predict what that company's going to do. But if they're back open or have been opened and the state's coming back, you can typically see either the revenues start to come back or the patterns. And that's what we're monitoring more than anything right now, is the patterns of the businesses reopening or reestablishing themselves. A lot we're seeing either on the same trajectory that they were, or even surpassing that trajectory, or we can make the determination it's going to take a long time to get back there. So that's what we're looking at right now.
Mm-hmm.
Great.
Tammy, feel free to jump in.
No, I agree. Everybody's trying to get their crystal ball out and understand what the future looks like. So, what we've said is, we're going day by day and case by case and just try to help as many people as we can.
I have one lender right now that has put a complete blacklist on everything construction.
Ooh.
I'm closing a 4.4
It's killing it here in Florida,
transaction
Steve.
this month.
Right.
Right.
Lender, I'd be like, yeah, I'll lend anything on construction.
Every construction business we look at is killing it right now. Everyone. We don't see a construction business that's bad. And their feeling is, once this economy really takes shape, those are all going to be hurting like we were in 2009.
Mm-hmm.
I totally disagree. But that's what's coming out from the lenders. They're all making some even fear-based decisions, but they put a blacklist on anything construction related.
That's crazy.
I've closed 2 roofing companies, and I'm doing a house remodeling company as we speak. Like I said, it's $4.4 million. And that's killing it. So, it's like Tammy said, a day-by-day case basis and a case-by-case basis.
Is there anything that we missed on the 7A loans that you think we need to let people know?
Let me see my notes.
Steve, you look over those notes. I want to say this. I just think that it's incredible. The banks are going to be extremely, extremely motivated to lend. Buyers are going to be in a situation where they're getting, the guarantee fee waived, which is a lot of money, 2.5%, 3%. That's a lot of money on a loan. And they're getting 6 months principal and interest paid off by the federal government. And then, if it's a more distressed business, to get even more. I think this could be a boom year for this industry. It really could be a boom year. And you put on top of that sellers, the taxes may go up next year in 2022. And if you got sellers that are thinking about selling in the next year or two, they may want to sell this year. And you got buyers that are going to be in a great position for the loans. It's a great time to bring those two together. I think this year could be a fantastic year. I don't want to get too excited, but I think it'd be a fantastic year, at least for the businesses that are doing well. The businesses that are struggling, obviously we all as business brokers got to be targeting the businesses that are doing well. But
I think that illustrates exactly that. They have to be more focused on the industries that are or less affected by the COVID, because there are a ton of businesses and industries that have done either better or the same. And those are the ones that I think brokers need to focus on moving forward.
I do too. There's a lot of businesses that are doing better. I've seen a lot of financials this year that their numbers are up quite a bit over 2019.
So have we. And that's what I think the brokers need to realign themselves with and understand those industries and target those as opposed to, the stationary stores and the little restaurants around the corner.
And the good thing too is, and I know this is going to be a negative thing for brokers, but I think it's a positive thing. I look at it as a very positive thing. Inventory is low. I looked at Florida, and I looked at it for a webinar I did with Ron West a couple weeks ago, but it was like 30%. We're down 30% in Florida in inventory. But I think that's a good thing because you bring a business to the market that's doing well, it's getting snapped up like that. They're going under contract very quickly because there's not that many good businesses. And I think it's just because people aren't targeting them enough. They're getting snapped up.
I have a question for you, Jim, as a broker and as a business development question. With all of these incentives, do you think this is a great selling tool for brokers as they're going out trying to get businesses? I don't know how it works these days, but I know when I used to do some business development, you might cold call somebody and say, hey, listen, you may not be looking to sell your business today, but here are some reasons that you may want to consider with all the incentives being given to borrowers and banks. Have you considered? Do you think that might be something that, should be brought up in some sales meetings?
Tammy, I'm not a CPA, I'm not a financial advisor, but I'm a business broker, and I'm just telling my buyers and sellers the way it is. And you tell the sellers, hey, look, this might be the perfect environment. If you're looking to sell in the next year or two, and you got to remember, there's a lot of sellers out there, a lot of business owners out there that, they're getting up there in age and they want to retire. They've been through a lot of crap. They've been through September 11th. They've been through the Great Recession. Now they're going through a pandemic. They might be just up to here with it all and be ready to sell. And if you're ready to sell, you may want to do it this year because next year taxes could go up. I don't know if they will or not, but they could. You have to do some research on that. But this is the situation with lenders, and this is the situation with buyers right now. And this just could be a perfect scenario. This could be a really good year for our industry, I think, for the right businesses.
Mm-hmm.
I agree. Typically, when we're in these scenarios, you don't have lenders. Well, we have great lenders all around us. So, and great incentives. So now it's just you brokers need to show up with your listings. That's what we're waiting for. We're all ready to go on our end.
Excellent. Well, let's bring in some questions. Anybody got any questions? Please, raise your virtual hand, and I'll start calling on people. First person we have is Nanda. Nanda, you're going to have to unmute yourself if you've got a question. We'd love to hear you. And please tell us where you're calling from, Nanda.
Yes, I'm calling from California, San Francisco Bay Area.
Oh, welcome.
And actually, so the deal is actually I'm working with Live Oak Bank. We have a loan that has just been approved. And but the question is the closing date. Okay, so we were originally supposed to close. This is a property purchase closing on January 31st. And we want to go back and ask the seller for an extension because we want to close after when we can qualify for this, getting this, the special benefits. The question is it February 1st, the date you apply for the PLP number, or can we set the closing date to be February 1st or 2nd or 3rd? That's what I'm confused about. It's like, how do we schedule this?
Yeah, I can answer that. I would check with your closer, but I would say if you got a few day extension, if you already prepared to close on the 31st and because the benefit is driven by when the bank pulls the authorization number of for the loan. So, I mean, if you're waiting for that benefit and you want to get an extension so that you can get that benefit, I don't know that, I can't advise you on that, but I will tell you that will, after that 31st, after the 1st is when, that benefit starts. So I would check with your closer on that. You may only need just a few days.
Just to clarify, so ask the closer saying, if you get the PLP number on the 1st, how many days would you need to close, right? And based on that, we'll talk to the seller saying, we want to close on February 10th or whatever that is. Okay, so I will confirm with them. Great, thank you.
Mm-hmm. You're welcome.
Sure. Thank you so much, Nanda. Okay, we also got Jeffrey calling in. Jeffrey, if you want to unmute yourself, we would like to bring you in. You should be popping up any minute. Make sure you unmute yourself and tell us where you're calling from, Jeffrey.
Texas.
Texas, awesome.
Austin.
Jeffrey? Jeffrey, can you hear us?
San Antonio. San Antonio? No, Austin.
All right.
Jeff, if you can hear us, either hold the space bar down, although it doesn't sound.
Yeah, I think he is unmuted. So, and I know that there are a lot of people are asking questions in the Q&A. It's hard for me to keep up. We've got like 27 questions in there. If you've got any questions, please raise your hand. And the best thing to do right now is raise your hand and we can bring you on. And in the meantime, Steve, Tammy, did we miss anything with any of this stuff?
I did see a question pop up about whether it was March 20th or 2020 or March 2021. And I think that the question was if the loan had closed to get that additional 3 months of benefits. And yes, it was if it closed in March or prior to March 2020 is going to get that additional benefit of that 3 months for existing loans.
All right.
Quick question though, on the, what was I gonna say? I had a question here. I was going, the fee waiver. So if they do close January 31st, they should be getting the fees waived, not 6 months worth of payments, correct?
That's correct.
Okay, so it's every loan since this bill got signed that the SBA guarantee fees are instantly waived.
If they did not already have their authorization number prior to the bill being signed. Because if you were supposed to close on December 29th, you would have already had your PLP number.
Gosh, that would have stunk if you got it the 23rd of December. I mean, I would just want to cry.
And it happened. It did happen because everybody knew.
I don't know. Where do you cut off though? I mean, that's the thing. Where do you cut off? We got Edward. Edward, where are you calling from?
California.
Oh, welcome, Edward.
Yeah. Hey, you guys are continuing to beat this to death, and thank you for that. But I'm still a little bit confused on the windows for the 6 month payment relief. So I've got a deal that's scheduled to close, yay, in about a week. But Tammy, you make a reference to the fact that the timing of the relief hinges on when they secured the SBA loan number, and I don't quite follow what that means because we've just got so many dates and so many deadlines. Can you try to help me understand that a little bit better? Or you just want me to go back to or go to the loan closer and try to understand it?
So it depends on your lender as to when they go through the stages. But your borrower is at some point assigned an SBA loan number. Right. And so that has to happen, at some point between approval and closing. So it depends on the lender as to when they do that. Some people wait till last minute. Some people do it right up front. It just kind of depends. So I would go back to whoever you're using as your lender. But what I'm saying is that loans that close after February 1st are eligible for that 6 month of benefit. So
closed or PLP numbers issued?
Yeah, that's the confusion.
No, I understand, but I don't want to manipulate the situation either. The bill says that after February 1st, they're eligible to receive that benefit. So yes, it's driven by that number, but that's the date that they become eligible.
So it's the closing date
number after February 1st, and you would obviously close after February 1st if you already pulled the number. If you're pulling the number after February 1st, you'd be closing after February 1st.
Right.
So in theory, if we walk through it, if we got our number sometime in January, we would get the fees waived. You get the fees waived, and then you close in February. Would you get your 6 months? No.
No.
So you got to wait till after February 1st to pull your numbers. That's the bottom line.
Edward, did that answer your question?
Yes.
Awesome.
And I'm glad that I brought it up because it seems that Steve was also a little bit confused on it. So it wasn't just me. Thank you.
Hey, you know what, Edward, that's a good point. I just want to say to everybody who's listening right now, if you remember last year and all the webinars that we did, we're giving you the latest, most up-to-date information that we know today. And just like last year, things will change and it'll be fluid. And we'll probably do another one of these in a couple of weeks when more information comes out from the government and, procedures are put into place. We're just trying to tell you everything we possibly can right now. And I think there's a few things that are left unknown.
No, you actually.
I was going to say what everyone has to understand to expand on what Jim just said. was, Tammy's reading it, I'm reading it, our superiors are reading it, everybody's reading it. It's all open to interpretation, and everyone makes their own determination of interpretation until we all get together in a few weeks and say, okay, this didn't work and this was incorrect. So as these weeks go on, we'll get more specific, but we're all just expelling what we interpret these rules to be saying. But the actual definitions, I mean, if you look at the 6,000 pages, you'd be more confused than anything else. It contradicts itself so many places in the bill, it's not even funny. So these are all interpretations, and that's why you keep hearing the words, we believe, our understanding, and we think, because until the SBA comes out with clarification, we're all flying by the seat of our pants.
But and it's good, but we wanted to get this information out as soon as possible, because as business brokers, we need to be talking to our buyers and sellers immediately about, what's available and things like that. And as I talk to them, I'm going to say, hey, these are the things that we definitely know, and these are the things we're not sure about, and things could change. And that's how I handled it last year, and it worked out great. And buyers and sellers understood, that things are kind of fluid because of the pandemic. So we've got
6 payments. That's your selling tool right there. You're going to talk to sellers and say, you got that window. You got a list today to close within that 6-month window and incentivize your buyer. That's your selling tool.
Sell. Yep. Get those listings. Jason.
Some things are lender specific too. So sometimes, the guidelines are the guidelines, but, different lenders do things differently. So I wouldn't want to advise, I would want anybody that has questions on a current transaction to go to their lender and make sure they have the right information
before they talk to the buyer and seller.
Yes.
Yeah. Jason, where are you calling from?
Hi, I'm calling from Houston, Texas.
Oh, okay, great. I'm sorry, we missed you before.
Yeah, for some reason it disconnected. But anyways, I had a couple quick questions. One, I wanted to know, is there any opportunity to help our existing clients who may not be ready to sell, but possibly get a SBA loan to expand and take advantage of the 6 months, or is it just related to acquisitions?
It's all SBA loans. So it's partner buyouts, expansion, purchase of real estate, acquisition, leasehold, build out, construction. It's all SBA loans, 504-7A Express.
That's fantastic. That's a good question, Jason. That's an excellent question.
Yeah.
Yeah, always. I mean, if they don't want to sell now, if you can help them expand, can benefit everyone in the future. My other question surrounds.
Jason, I'm going to cut you. I'm sorry to cut you off, but that's a good thing to give an excuse to. Call your buyers that bought businesses from you in the past and just call them up and just say, hey, wanted to let you know that if you need a loan, this is the time to do it. And it just gives you that excuse to give them a call, give them some information, and they're going to keep you in mind. A year or 2 years from now, they do want to sell it. It's just a good way to stay in touch with them. I'm sorry, Jason, go ahead.
Yeah, no, that's a good point. So my other question was surrounding the 3 months of payments for existing SBA loans and a potential additional 5 months. How is that expected to impact selling a business if they have a current SBA loan and they have those payments? Would they have to delay? I mean, I guess, on one hand, you have buyers looking to get 6 months and waive guarantee fees. And then on the other hand, if the seller is getting a benefit now, they may not want to sell. So I was wondering if there's any workaround for that, or how we should be looking at that.
So I'm not sure it should really play a factor. I see exactly what you're saying, but the payments it's not like the PPP where it gets forgiven or anything like that. It's automatic. That happens. The lender goes right to the SBA and gets those payments. So although your borrower probably would benefit more from it, your seller is just getting 3 months of payments on an SBA loan that they're going to terminate at time of transaction anyways. So, that might be something to think about.
Okay, thank you. Thank you so much.
Jason, thank you so much for joining us today. I really appreciate that, buddy.
Yeah.
Okay, let's bring Angelo up. Angelo, you're going to have to unmute yourself when you come up. He should be joining us in a second. Anybody else has any questions, raise your hand. We're going to be running out of time, so. Okay, Angelo. Hopefully you can hear us. You're gonna have to unmute. There you go. Where are you calling from, Angelo? I think we lost him too.
I think it's an exciting time to be in our world. Every day is changing.
And you know what a great expansion opportunity is an existing business to purchase a piece of real estate, especially right now. They could do it with no money down under the expansion program. So no money down, 6 months of payments, guarantee fees waived. Got yourself some rent replacement and you have an asset.
Yep.
Hey, Edward, are you with us? Where are you calling from?
Yeah, it's me again. One thing I noticed, it seems like, and I should have just chatted this, I'm sorry for taking up time, but it seems like there's a technical glitch that when we try to unmute or come on our end, it immediately tries to relaunch the program.
Oh, really? Okay, that's good to know.
That's it.
Keeps our questions to a minimum.
Okay, let's try Angelo again.
Any limit on the SBA guarantee fee waiver? Not to my understanding. I'm just picking out questions out of the Q&A.
Where are you calling
But,
from, Angelo? Yeah, I don't know. There must be something going on with Zoom today, so I apologize about that, everybody.
Q&A is filled up, which is maybe why.
Do you guys see any Q&As that you guys think would be good to answer? I think we just lost Angelo. I think we had him and then we just lost him.
Well, here's a question. It says, with a 90% guarantee, will that incentivize the lenders to lower the interest rates? Well, I'll be happy to join on that one. No. And I can tell you why. And I'm always honest when I answer this question. It's because when they sell their loans, and our lenders pretty much sell every loan that we write, it's worth a lot more on the secondary market. That's really why you're seeing prime plus 2 3/4 in most cases. You know, portfolio lenders have a different appetite and may have a little bit more incentive. I have always preached that what really drives that is the amount of collateral in a loan. You know, if you're talking $4 million of all goodwill, good luck. You know, yet on that $4 million loan, if $3 million is collateralized, then you got something to talk about with lenders. But that's just my opinion on the 275.
Excellent. Angelo, you have a question, buddy? Oh, we can't hear you, Angelo. We can't hear you.
Jim, can you unmute him? Because he seems to be on mute as the host.
I can mute him. I think he's already unmuted.
Mm.
Yeah, I just. All right. So I guess that's it. We're just having some technical difficulties today. So I'm sorry, Angelo. I'm really sorry, buddy. All right. So I guess that's it. I don't want to hold you guys up. I know you guys are extremely busy, Tammy and Steve, and I just want to say, you know, from all the business brokers, from all of us business brokers out there, we really appreciate you guys, you know, being here today and always giving us your insight and your knowledge. And anybody that's listening today, you know, please, you know, reach out to Steve Mariani and Tammy Teece if you want to do deals. You know, they take their time out to do these, to educate us, and we should reward them by bringing them multi-million-dollar SBA loans. Right, guys?
Absolutely. We are here for this industry on so many levels for years and years, and that's what we do.
But thank you so much, guys. And I know you guys don't do it to get loans. You guys do it because you could do it for the good of the industry. But I do think as business brokers, we should pay you back by bringing you some loans. So we're gonna wrap it up for today. And you know, I really appreciate everybody joining us today. And you know, next week we're gonna have another webinar. I'll have a video going out about that. And please, if you have not already, please subscribe to the YouTube channel. It really would be appreciated. This will be on YouTube probably tonight. And in the meantime, keep working hard, keep working smart, keep making those buyer-seller connections. Thank you, everybody.